Hi there, you're at the Binance Coin Wyckoff technical analysis session. We'll go straight into the charts and see where Binance Coin is heading, both from the weekly and daily time frame. So here we're looking at the weekly chart, and previously we have tagged this upthrust of the distribution over here, and this week with only a little bit more than 7 hours left, the price seems to be facing a plateau. And does it mean it's time for the price to eventually come down for an automatic reaction after this peak, and that the peak is already done? So for the last two candles, this week and last week, basically it's a narrow range battle between the bulls and the bears. So we can see a very short candlestick body, but there are pretty long wicks. Especially this week, the top is pretty short over here, meaning there's not much bulls getting in, because otherwise it would look like something we had the week before, meaning somebody pushed the price very high to the ceiling of the upward trend box, but it did not happen this week. However, there's still some bulls buying the dip, pushing the price back to above the purple key level. So that's what happened in the weekly time frame. The price is still being battled around by the bulls and bears to stay within the 845 key level. Looking at the volume, obviously it's lower than the previous weeks in July, where the price got pushed to the level where we are at. So it may be an early signal of the FOMO finally dying down. So I'll remain these tags over here, because I believe last week when I shared in the weekly time frame, the stages will take time to evolve and finally reveal themselves, but it would still be these in the next few weeks to come. So last time during the upthrust, we saw a brief red candle with a very long wick at the bottom, meaning the bulls successfully defended it while the bears tried to push it down. But this time, this wick is not as long, though it went below the purple key level. So next week's candle, whether it would repeat the same story with a long red candlestick that come down to challenge the blue key level of 740 and reach the stage of automatic reaction free, that's the scenario we are waiting for and trying to see whether that would happen. So that's like a 70% chance scenario. The other 30% will be trading sideways and maybe even touching the top edge over there. So the top of the upward trend ceiling. So 30% still between the ceiling as well as the purple key level. 70% probably around here. So I can mark a 70% right there. We know the other is up there. So that's the weekly time frame, and the daily here. After the upthrust of the distribution for the daily time frame, last time we talked about where is the AR3. While it's still staying above the purple key level, this could be the AR3 for the daily time frame. And if what we saw 3 days ago on the Thursday was the LPSY, then eventually it may show some sign of weakness at that high level before it comes down for another sign of weakness at the blue key level. So as of now, it's normal to see some more peaks, because that's how usually when prices come down from a peak, they take a couple of bounces before it eventually make a deep dive. So that is totally normal and would develop in the next few days. We may see another dip to the purple and then another mini peak before the price falls through the key purple level. However, there's also this yellow dashed line. That's the upward trend support line in the daily time frame. So this has been supporting the bounces since the June 22nd sign of weakness. As of now, the price is still trading above this, but when we get to somewhere around September 11th, Thursday, or like September 12th, Friday, so in less than 2 weeks time, this is going to get to a point to test this double support. So assuming if the price is trading sideways, like the 30% scenario I mentioned in the weekly chart, it will eventually enter this corner by this upward trend line as well as the top edge, meaning the ceiling of the upward channel box that I just talked about in the weekly time frame. When that happens, an upward wedge in terms of candlestick pattern analysis is a bearish sign. So the price may break to the downside if it follows the textbook definition of candlestick pattern analysis. So be careful if the price continues to stay within this zone. If it comes down, we already expect it to happen. There are two support levels for it to cross before coming down to the blue key level of around 740. So the yellow upward trend line, the purple key level are the first two levels to defend this fall. One more indication, if you are new to this Bollinger Band Keltner squeeze indicator is showing us the purple has entered the orange, meaning a squeeze is happening. Whenever a squeeze happens, a bigger price move would show up. It doesn't tell us for how long a squeeze can happen before the swing comes, but it definitely shows us some big moves when the forces gathered by the squeeze eventually got released. So one happened back in June, where it leads to the leg up in July. Another one happened in May that led to the leg up in second week of May. But don't take it wrong, because a squeeze can also mean a downtrend as well. So it only tells us momentum has been gathered and a price move, a bigger price swing is about to happen. And now we have entered a squeeze for Binance Coin. So expect some bigger price move coming while the consolidation is still happening at the moment. So in the next few days, maybe the price will continue to gather, but don't be surprised if a sudden price move suddenly break out. In the weekly, however, the squeeze force that has been gathered during May to end June has been released over the past 2 months, meaning July and August, and it's still far from another squeeze. So from a broader time frame perspective, the bigger price move may not happen immediately, though it's the squeeze, while it shows this, but it's not always saying if there's no squeeze, a big price move won't happen. It's not like that. So let me show you here an example. Last year in May, end of May, after the buying climax, we see there was no squeeze, but then from the buying climax to the automatic reaction, it just dropped like that from the channel top to the channel bottom. So now we are at a similar situation. The price has gone above the orange, similar to the buying climax back then, and then the AR came back in July 2024 and shot all the way where the wick of the candle almost touches the bottom of the band. So that if that happens, the bottom of the band right now is around mid 600. So hopefully it's not going to drop that far. But back then it took 3 to 4 weeks from the top to the bottom of that channel of the band. So from there, if we count 3 to 4 weeks from now, that's around the end of September. If it really happens the same way as what it did back in 2024. Even here there's another example, but that's a closer call, like a squeeze has happened. So this one is obviously not a squeeze, but a drop happened. Here, the upthrust, you can say partial squeeze has happened. So it's arguable for this, but this one is much clearer. So that's all